Hi, Leslie. Indeed, just crossing the tape. These are October final reads to replace the mid-month read, and the mid-month read of 55 deteriorates to 53.6. 53.6. That would be the weakest level going back to May of this year. If we look at the current conditions, from 61 mid-month to 58.6, 58.6 would be the weakest going back to you're going all the way back to July of 22. July of 22 on expectation. Same, 50.3, and that is from 51.2, a big deterioration there. That would be the weakest going back to May of this year when it was under 50. Now let's get to the inflation data. The mid-month at 4.6 remains at 4.6. However, the 5 to 10-year read moves from 3.7 to 3.9, the warmest since June when it was 4%. We see that yields are back up, as Carl just pointed out. And do keep in mind, we settled at 401 last week on a 10, which means you're about unchanged for the week. We settled at 398 yesterday. We're up on the session. Same for two-year. Two-year 346 last week, up 2. Yesterday it was exactly at 346. So we're, we're down a couple there as well. Maybe the most important feature continues to be that the CPI data was cooler than expectations. The initial market move was lower yields and higher equities. As it sunk in, that were well above the 2% target. Rates came back, but we still see that the pre-opening equities held good, and the final equity markets are also way in the green. Mike Santoli, back to you.